breadth of the market moving up. It's healthy. It means it's got more to go. The buying hasn't dried up. We can use trend line breaks, or as I got moving averages, we look for accumulation patterns. HH stands for higher highs. HL stands for a higher low. Just like in a chart, stair step. If a market's going up, I want to see price go up, I want to see volume go up, and I want to see on a stock index or stocks that I own that are in that index, I want to see those also accumulate and make higher high and higher lows. I want to see if the market's giving me a bearish indication, a distribution pattern, which is a lower high or a lower low. That's a distribution pattern. So let's take a look at the E-mini S&Ps from September, when the world was looking at it as going to zero, which we did form a daily high close doji at weekly pivot. This was the unenjoyment report, a PPS buy signal, and at that point in time, we already started to see an accumulation, a strong accumulation of the amount of stocks in the S&P 500 had already started to surge ahead. The AD line started to move up. That's the Friday of the unemployment report right there. This is the fateful October 6th newsletter week. The dynamic of that newsletter was important because the overall stock market had already surged. Look at the price points that I'm sharing with you on the chart. This is the AD line reading. Look at where it is relative to the old high. Look where the price is. It's breaking out. There's more stocks moving up. It showed that it had more room to run. This was very bullish. This is a sign that says, let me not do a onesie-twosie trade. Let me put a trade on. This gives you the confidence that this market has power behind it. Or if you get long, let's not look to scalp the market. Let's maybe hold it a couple extra hours, all right? If you're like me, I tend to get in a little early. I tend to always get out a little early. And that comes from an options background. Because of theta decay, I tend to take the bulk of the move. But in a stock position, when I have an overall move, and I can now look at the pattern here, in the beginning phase of a move, and this is advanced, but here's how you can read this, just like a price. In the beginning phases of a market, it's not that we'll see a market make a new higher high, but you absolutely will see higher lows. In the beginning phases of a market turn, as it starts to move up, you might not see aggressive higher highs, but you should see higher lows. And then as the market starts to get into more of a mature trend and people jump on the bandwagon, that's when you get the aggressive move. How many people have visualized that in a trade? Starts to move, starts to move, starts to move. All of a sudden, it really starts to move, and then it accelerates, and it's generally the blow-off top, and that's why it's called a blow-off top, at the end of the move. In the beginning, it's developing momentum. It's gaining confidence. People go, okay, I'll buy a little. And the next guy, I like that. And then all of a sudden, it starts to aggressively move. That's the nature of what makes markets tick. In the advanced decline analysis, wow, we got a little bit of a pullback, but we're still making relative higher lows, and making higher highs. And that gives us the indication that we have a stronger market movement ahead. So these are weekly pivots, actually. 1, 2, 3, 4, 5. If you count a daily chart, real simple to understand what's on my chart or what's on any of your charts. If you have a daily chart and you have lines that go across that have dots that line up with the days, if there's 5 dots or it's only 5 periods, there's 5 trading days in a week, you can back test me immediately and say those are weekly pivots. Okay? So this was the unenjoyment report that day right there, right? So pivots are all used to define what? Note that at the end of Friday, we still made a blue below gold, but the market was giving us a higher red reading. The market actually did stall for 2 whole days at weekly pivot resistance. When you're looking at a bullish reversal, what's the condition? Which reversal do I trust being stronger than another? How do I filter out a better buy signal? This is a buy signal. That's a high close doji. How do I filter that and know that that might have more follow through? That's a damn good question, isn't it? I'm sharing with you how. Is the advanced decline aggressively moving relative to the price at that point in time? This is the cumulative advanced decline. Only a handful of people actually have this information. Not many platforms have this information. I've created this. This is the advanced decline on the S&P 500. Genesis has it. My lifetime in Genesis. My lifetime on TradeStation has it. Thinkorswim hasn't figured it out, and I'm not teaching them. If we're trading S&Ps, then we want to look at S&Ps. If we're looking at a buy signal and maybe it's breaking out and I have pivot and it's saying, hey, we got a higher high, does that mean absolutely that's the resistance that might be trusted? Or maybe I should also pay a focus on the weekly pivot giving me a higher high reading, but the market internals is really developing a stronger current. At the very least, maybe I'll respect that peak weekly pivot resistance, but I'm not going to go short. Now, if it breaks out of resistance, typically resistance becomes support. Ironically, broke out, came back, acts as support. That old red line was actually near this week's blue line. It's still indicating at this point in time a bullish market momentum. This was the Russell this year, not last year, not 20 years ago. This is the advanced decline of the Russell 2000. All 2,000 stocks. As we were making, can everyone see this peak in price relative to that peak in price? How was the peak in advanced decline ratings? Slightly lower, actually. So the market had a run-up, breakout, but not an accumulation of stocks moving up in concert, breaking out as well. Had the AD line broken out and made new highs, it would give a better, clearer signal that the pullback was probably going to be a light pullback. And then all of a sudden, look what happened. The market breaks, it pulls back, and it almost comes right up, by the way, price testing the moving average crossover. Note to self, price correcting back to test moving average crossover, not absolute high. Look at your AD lines. Lower lows and lower highs. If I could teach you to not look at this as many times as maybe looking at this, what's the overall breadth of the market looking like right now? What's the overall trend of the market looking like right now? It's not looking healthy, is it? What's the McClellan oscillator? Every platform has Sherman-McClellan's oscillator. If you have eSignal, E-Trade, Schwab, I think everyone should have the McClellan index. Basically, it uses the data components of the NYSE, advancers versus decliners, and the oscillator is just a difference between the 19-day and 39 exponential moving average. Again, moving average. And what we do is we just take the average of the net daily advances minus the daily declines. So basically, look at what we're looking at. 19-day versus 39-day. What are we looking at? Namely, a 1 month versus a 2 month time frame. 19 trading days in a month versus about 19 trading days in a month. And there's approximately 40 trading days in 2. So basically, these numbers represent the look back of a 1 month, 2 month time period. What's the overall market internal structure from 1 month to 2 month comparison? The oscillator gives us it's considered by some who don't understand it, they think it's not a useful tool. It is actually a leading price indicator, leading. On October 6th, weekly thoughts and observation, we posted out that the market was forming in the McClellan oscillator a bullish convergence on a weekly basis, which means don't be long for just a day trade. The bullish convergence. Are you guys familiar with Wall Street Week? Do you remember Louis Rukeyser? How many people remember Louis Rukeyser? You remember the elves? The elves, right? Interesting story. While I do have an illustrious past and love rock and roll, junior in high school, I was taking an advanced business course, and our teacher made us as a homework assignment. What sick bastard was this guy, right? He made us for that class, an AP business class, junior in high school, made us watch Louis Rukeyser, which came, I think, Friday nights at 7 p.m., right? I mean, what kind of a guy makes a junior in high school kid in the 70s stay home on a Friday night watching Louis Rukeyser? What an asshole, right? Well, I'll tell you what. I loved it, but I figured out I could watch the rerun on Sunday mornings. Most people didn't know it had a rerun on Sunday morning on PBS. Yeah. So Friday night, woo. Anyway, true story. There was a guy on there that was very famous for breadth analysis, Marty Zweig. Remember Martin Zweig? Martin Zweig had, I don't know what he called it. He might call it, I don't know. I don't know what he called it. It was the Marty Zweig behemoth. I don't know. It was something. But what it was based off of the McClellan oscillator. And he used weekly analysis, by the way. You really have to know your shit to remember this one. Guys like Greg Morris, Murphy Morris, who's an old school technician that uses breadth analysis. And it's old school stuff, man. It's not something that's, a lot of people don't, they use it. The few that use it, they probably don't use it 100%. But I want to share with you guys how you can use it more efficiently. Marty Zweig had this thing that when the weekly went from an extreme negative within, like, say, on an intra-week basis to an extreme positive, it was like a once-in-a-lifetime buying opportunity. I forgot what it was called. I mean, I kind of remember, but I kind of don't. But we had that happen last month, by the way. Unless the weekly McClellan oscillator gets back under the 0 line and back under maybe 100 reading, this stock market has all the full intentions of seeing new highs on the year. And you can go Google Marty Zweig's indicator, whatever he called it. It was very rare to happen. It happened 5 or 6 times post-war, World War II, something like that. And each time the market had one hell of a move, something like that. Anyway, he did die. He was in, I believe Martin lived in Florida. I think he made a boatload of cash and lived in, I think he lived in Fisher Island, in fact, on him. Just takes a buck or two to live there. Wow. So we're going to say hi. This is Piers Morgan. Piers is sitting in the front row, and he's the next thing to a living celebrity because he did meet Marty. And so from a technical standpoint, we can get a little of Marty by shaking Piers' hand. Piers will sign fake autographs for $4 each and keep 2, give 2 to charity. Good man. All right. So anyway, if you read through this, I have beleaguered to include this in your presentation, which you can spend oodles of money on, read technical books. But if you just spend the time, if I've put it in a PowerPoint, it's not filler information. If it's got a bullet point on it, it's probably important, okay? So first and foremost, readings below -100 helps to identify market bottoms. Readings above +100 indicate markets are nearing overbought market conditions. We can find outer bands between negative 150 and negative 300 to be more reliable, indicating a market bottom, as we did see on an intraday basis on October 24th. I think the move went to like negative 460 something. So it can go to whatever in a short period of time. But on typical day in, day out stuff, any move in the oscillator under these readings. So it's a very bearish day and the readings near negative 2, negative 3, something like that, you probably have an extreme oversold market condition. It's not time to throw a baby or the bathwater out. It's time to look for buying opportunities. And the same can be said for overbought conditions. We have, as I want to reemphasize, overbought and oversold readings, a zero, what a coincidence, a zero line reject. I wrote about it last night because it had a zero line reject. What is a zero line reject? And it also allows us to look at convergences and divergences. And I use daily and weekly time frames. I not only use it, I write about it. So, AD divergences. If the market's moving up and the AD lines are not corresponding with that move up, by the way, it will give you an indication that the market has a divergence, as you can see, relative to the last known price high and the last peak of the indicator, just like OBV. This is the last peak. That's where prices were. Prices makes a new high and the indicator does not. And all of a sudden you start to see the market roll over. You know we're coming down. And all of a sudden we get into an extreme low. You know the market's probably overdone. We get bearish divergences, AD line divergences, just like here. Market makes newer highs, has big sell-offs coming because we had big, powerful divergences. A zero line rejects occur from extreme readings. Key word, occur from extreme readings. What did I say? Occur from an extreme reading. So when you're below maybe 150 and the market goes back up and crosses the zero line, maybe it goes to like positive 20, positive 30, and then it comes back and taps the zero line and starts to uptick, that's a zero line reject. It means that there's probably more strength or continuation to the upside. The opposite is true for bearish. So the market, from an extreme oversold condition, goes up to test the zero line. It nicks it, the market rallies. Guess what? It can't get through the zero line. It's a zero line reject. Yikes, the market revolves right back down. Reading the oscillator. You don't just pick up a book and say, here's the McClellan oscillator, oversold, overbought, forget anything else. That's why people don't use it, because they don't understand it. At dinner last night, I gave a story about I had to do a presentation with 4 other people in Egypt in this November of 2007, before the country imploded. It was not a very pleasant trip. I would never go back to Egypt. If I want to see a pyramid, there's a place in Las Vegas called the Luxor Casino. I'm going there. Okay? I don't need to visit a Spice Mark. The local grocery store sells all the cinnamon I really need. I'm good. Okay? Just going to throw that on out there. I had the privilege of being one of the keynote speakers to the IFTA conference, standing for the International Federation of Technical Analysis Society. It was myself, Martin Pring, Sherman McClellan, who was, I think Sherman, if he wasn't 97, then he's got to give up smoking. No, I'm joking. I'm sorry. It was quite an honor to stand next to him, because he was the breakthrough of this type of analysis. And also we had Tom Dorsey, who is an avid fisherman, and Dorsey Wright, point and figure. So anyway, and then John Person. So it was kind of like a neat thing, and I was giving the person's pivots shtick of the 1 and 3 period pivot point moving average to European. I mean, the IFTA conference is the heads of the 5 families of all big brokerage firms on an international scale. the Middle East. There was a few sheiks running around, and it was kind of an interesting thing, to be truthful. It was at a resort at Sharm el-Sheikh, the same resort, by the way, that President Obama stayed at one of his visits. Ironically, there was no golf course there, so I don't understand it. Anyway, I'm in trouble at this point. Larry, my wife is looking at me. That was not a political statement. I'm just saying there was no golf course there. So a zero line reject, when the market tries to break through or does break through and comes back and tests the zero line and continues up, it looks as if the market's in a continuation pattern. So I wrote about the zero line reject today because the first and foremost thing, believe it or not, I actually use my stuff, and I always make a comment every once in a while, jokingly in the trading room. I say a lot of times, you know, I actually, you know, I'm in that trade because I actually believe my own BS every once in a while, you know, my sense of humor. I do this work for me. You know, Jeff says, you know, he does work because he loves it. I do work because this is all I know and I love it and I'm intrigued by it. And I also don't like losing money. So with that said, this is my AD line RS page. We went through this a little bit. And looking at, again, this is a weekly AD McClellan oscillator. This is the daily McClellan oscillator. So just the opposite of your PowerPoint. The market was negative, rallies to the zero line, tests the zero line, and fails. The market went back down and made a significant lower low. The opposite just occurred on a bullish example because the market has been overbought a little bit in the McClellan oscillator. It came down, hit the zero line, and it is bouncing off. It's a zero line reject. Okay? So this is a daily chart, and this is a official zero line reject, why I wrote about it. How often do you need to look at the McClellan oscillator? Once a day, once a week. If you're looking at the health after a strong uptrend in the market and you think it's going to correct and it's going to go down, it would behoove you to take a look at what the strength of the market is, the market internals, and that's why people look at the internals. As a day trader, I really do not look at the tick anymore at all. It's old school because the tick all revolves around the NYSE, New York Stock Exchange Composite Index. We have noticed in the last few years that we are not trading just NYSE-led sectors. We're trading biotech, financials, energy. We have a much more aggressive intellect type of trading market environment, which is more stock index weighted selection. In other words, maybe one day we see more impact on the NASDAQ 100, more impact on the small cap, Russell 2000, more impact on the S&P 500. Can this indicator be transposed to using data from just the S&Ps? Yes, they have that on Bloomberg Terminal. Can it be for any market or a subsector? Absolutely, they do it on Bloomberg Terminals. Bloomberg Terminals are approximately $1,500 a month. And then plus, any other type of extra bonus package like mine or someone else's, that's extra. That's usually reserved for an institution, a large firm with the Bloomberg Terminals. Fantastic information. And yes, they have different ways of dissecting data. So if you're interested in, and I think what we have created is a way to look at the markets without having the breadth analysis by having this radar screen. And that radar screen gives me something a little bit better than the AD lines. I know on an intraday basis how many stocks are generating a 15-minute buy signal, how many stocks have been in a 15-minute buy signal on an intraday basis. I don't want to know if the stock indices are up how much, what's the net change on a percentage basis, because all of these sectors, these top sectors, are all priced differently. A 10% move on a $35 instrument is a lot different than a 10% move on a $200 instrument. Agreed? So in terms of percent, I want to look at not the net change. I want to look at the percent. And generally, I can take a gander and say, gee, if one sector like IBB is up 2.5% today, XLV more likely is also seeing follow-through strength, up 1.5%. The two best performing sectors, once again, follow through is in the medical and the healthcare, the biotech. If we do see a correction this week, those are the ones that are going to weigh on the Qs. Obviously, those two are probably giving, and we can see it right here. The Qs are up 0.5%. So where is, just to take a look at the board real quick, looking at technology, SMH up less than 0.8%. Looking at technology up 0.3%. So these two sectors are keeping, there's a little bit of money coming into the Russell right now. Relative to the markets, I can take a gander and see exactly where the strongest money flow is going and where's the weakest money coming from. XOP, by the way, up 1.25% today. So I've got energies, I got drug stocks, and that's what's affecting the market right now. So I can take a quick look at the market, and just by looking at this top shelf sector ETF, not by a heat map relative to the net change on the day, but heat map on the percent change of the day, and is it in a relative to the daily or the weekly, is it in a short-term buy signal, right? So I know that, man, they're not just up, but they're moving up. So I can take a look at XOP, and I know immediately it'd been in a buy signal because it was green. It'd been in a 15-minute buy signal. There's your 15-minute. This is a 15-minute chart, and it's in a buy signal. So this is really a living, breathing, advanced decline indicator giving you superior information real time. That's what this really is. All right. So I wanted to tell you how to utilize the McClellan oscillator before we went further. Again, bearish divergences in the market, it can be used against the S&P 500. Oversold, overbought, zero line rejects. Look at the corresponding to read this information. When you go home and you say, what the heck was he talking about? I was sipping coffee and I missed it. Went right over my head. When you get to this and you go, oh yeah, he's pointing an arrow because he showed where the price made a higher high and the indicator made a significant lower low, probably suggesting that the market was not bullish. Okay, that's bearish divergence. That's what that means. And this is not from this year, actually. This is from the 2007 market. So if you want to take a picture and say, snapshot, mental note to self, when do we see a market major peak? What do they look like? Right there. Zero line rejects. The market recovers. Gee, it's probably the market going to break out and make a new high. Not unless we get a crossover above the zero line. Otherwise, it's a zero line recheck. So if the media says, gee, this is a great stock market, it's going back up, it's awesome. And you look at this and say, gee, I think I'm going to fade that TV station guy. And you'll probably end up being right. Playing extreme readings. Market goes from a way oversold in a very short period of time to way overbought. It's not healthy. And then you get more follow through. This is actually this tool from the time period Lehman Brothers, Bear Stearns, the whole world crashed to the actual low that made the market in March of 2009. Did price make a newer low relative to a last swing low? Price made absolutely a newer low. Price made absolutely over time a much substantial lower low. Then why did the McClellan oscillator not make even a more significant lower low? Did you see that? And this has a direct relationship to what I was sharing with you yesterday of why people make the wrong decisions when they look at a chart. And the reason they make a wrong decision more times than not is they've got a very small sample of the chart. They have a daily chart, for example, up on their screen, and they only have the last month or two, or they have the last 4 months or so. And they don't look at the indicator entirely, and they don't look at the total picture. Remember I shared that with you? If you're going to take a look at a chart, you better get a wider screenshot where relative the volume is relative to whatever that product is, okay? Instead of just saying, oh, look, this looks bullish here. Does it really look bullish, or does it look super bullish? What does it look like? Or is it look super bullish, but yet maybe if you pulled up more data on your chart, it was only bullish for the near term. And that's why I like to stress and reemphasize, look at your different time frames. Daily, weekly, monthly. And that's why I incorporate, and not many people will look at a McClellan oscillator on a weekly basis, because most people are what? Short-term in nature. But you will get a better edge in understanding the true longer-term health of the market, and maybe identifying this is a much deeper, significant bullish convergence. And so therefore, we might see a stronger reaction. How much would you do? How much more money would you make holding on to some of your winners, knowing that there was a much stronger undercurrent in the market? If you had better confidence, I myself will hang on and scale out less. And that's the key. It's like you go out to the ocean here before you go home, 2 miles away, up the street, Juno Beach, and you can look out, and it's gorgeous. It's pristine. It's beautiful. One day you walk into that water, and there's not a ripple or a tide, and you're going to find your ass 300 yards offshore because you didn't see the undertow under the market. Does that make sense? That's what I'm trying to teach you. This is the surface of the ocean. This is the undertow current that you don't see. The less people that know about this, the better. Okay? And these are the tools. How many people feel this is too hard to figure out? How many people feel this is too hard to figure out? I'm not even looking. All right, never mind. I cheated. So, bullish convergences. We started to develop a more bullish attitude, by the way. Do you remember in my writing, because I know everyone reads it all the time, but on October 6th, on that document, I said we have potential convergence. Divergence is bearish, convergence is bullish. It's like saying a positive 50 delta versus a negative 50 delta. Immediately, as an option trader, you know the difference that positive delta means a call, negative delta means a put. I don't have to say put or call. I can just say negative 30 delta, and you know I'm talking on an out-of-the-money put, right? For all you option aficionados out there. For those who don't know what a put and a call is, we'll get to that later. But I wrote in the newsletter, or the weekly thoughts. It's not really a newsletter. It's just the weekly thoughts. Bullish convergence. October 6th, look at this bullish convergence. This is the McClellan oscillator and the daily chart on the S&Ps. While we didn't have an actual lower low exactly on that market, we had a very significant stronger reading. That would have been from a Marty Zweig perspective. That would have been his, I don't know if he calls it a kahuna, a kazuna, a volcano. I don't know what he called it. He called it something major. I don't know what he called it. Anyway, Jeff is going to come up. Jeff was closing today. I was taking it all over, and I was kind of like put some stuff in here to fill for Jeff, but then Jeff was able to come back, and he's on the phone right now. So I'm going to continue in with this subject line here of on-balance volume. Questions and concerns on McClellan oscillator or breadth analysis? Yes, Steve. Both. I hate to tell you both. I mean, are we entering an a significant weekly oversold market condition? if the weekly's in a significant oversold condition, right, and you're looking to get short, but the daily might be overbought, you might get a 1 or 2 day reprieve, and then you get short, and kazam, you're smacked in the face. The inverse is true, right? I think one's relative to the other. How many is a swing trade? Define a swing trade for you. 4 hours or 3 to 5 days? Yeah, well, when you're stopped out, when you're really right or really wrong in the same day, that's when it's a swing trade turns to be a day trade. I get that. Okay. But I look at the relationship of both. I've never written about one without the other. All it takes is the difference of hitting a keystroke on a chart. It's really a matter of doing this. It's just a matter of doing this. D or W. And on my charts, typically green means the market's oversold. It's a buying opportunity. Red, which got deleted, means the market's overbought and it's a selling opportunity. Green, good. Red, bad for longs. So I color code everything. Green support, red for resistance in that content. Why it's out of scale, I don't know. But again, key element: green, good. Oversold. Red, bad. Overbought. If long and you're way up there, bad. Look for turnarounds. Market comes in, forms a zero line reject. This market, relative to its past history, which is why it's considered a leading indicator, because based on past history, the market is above the zero line, and this is a daily chart, is not oversold. It is fairly valued. The weekly is not overbought. It's not overbought. The weekly is cleared the zero line. Overbought would be something up near the red line in the weeks ahead. How many weeks? I don't know. This is smarter than your average person's trading indicators right here. OBV. I think I've beleaguered the point already about, this is AIV, Apartment Investment Trust. This was the trade why I made a recommendation on a weekly high close doji, but this is a daily chart. Look at the OBV. Look at the direction of the volume. I told you yesterday, I'll say it again. When I get volume going down and the OBV going up, I get excited because I know no one really watches OBV relative to the masses. Everyone's watching this. No one believes the market can go up. It's got light volume, so they're probably short or not in it, right? And then all of a sudden, it starts to really prove itself. This should be outlawed. Strong trend, no volume, but OBV is completely divergent in the fact that there was strong accumulation of volume. This was Microsoft. Maybe hard to tell, but OBV, this is just absolutely criminal. How many people are excited to have been here to seen this live? To now say, holy, you can't make this stuff up. And I know I show this and there's somebody in the back going, well, look at my chart. Maybe he doctored that up a bit. I know there's a doubting Thomas or 5 or 10 of you out there. I know there are. But, you look and say, wow, you know what? Yeah, this kid's right. This guy he's for an old man. He's still got something in him, right? Wow, let's not put him to the horse pasture quite yet. We'll keep him around. I kind of feel like Lefty Rosenthal in the movie Casino. You remember the movie Casino? All right, so that's actually a 4,000% true story from start to finish, by the way. Did you know that? Not any of it is fictitious. It's mostly 100% true. In fact, the Spilotro brothers, Nicky, they were buried in a cornfield right outside Illinois. A condo association at the farm started breaking ground, and that's how they found their bodies, and that's how they know they were beaten to shit with baseball bats or lead pipes. They don't know exactly what it was, but the Spilotro brothers were uncovered and found in a cornfield. I think that was in the early 90s or late 80s, the Nicky Spilotro. Big news in Chicago. Anyway, that movie, Lefty Rosenthal, who it is reported has a very famous cousin in Chicago. And if you're a trader, you may know, or the name of the firm that cousin had owned, reportedly. Long and short of it is, he really was, quote unquote, a market maker for the books. And in fact, I think he at one point lived in Miami after he left, not California like the movie said, but he's down in Miami and still did handicapping for sports books. Anyway, so if you watch that movie, that's part of that whole scene. I don't know why I went on a tangent like that, but I kind of feel like the guy. The only reason people keep me around is my ability to maybe handicap markets, because I don't play golf and I stay up till 9 o'clock on a Sunday night doing technical analysis. But again, here's a great example, even Microsoft, of how the heck would we trust one high closed doji versus another, and why I do not even look or have any appeal for the volume. This is a widely held company, Microsoft, correct? It's not a penny stock. It's probably in everyone's 401k portfolio, right? But yet, how in the heck do you see, and this is the blue line, it's a 10-period moving average. 10-period moving average, all right? Now, for a lot of my work, if I don't want you to see what moving averages I use, I hide them, all right? But I don't mind 10-period moving average. I use relative other moving averages on OBV. I might cheat and use a pivot point average. I might cheat and use an exponential. And I cheat depending on the market. And I'm not going to share it with you if it's hidden. If it's hidden, it's proprietary. I'm just being graceful and nice in the best way I possibly know how. But I don't mind sharing what is typical on a daily chart of a simple 10-day period moving average. It's 2 weeks. It's not 20. It's not 5. It's a good representation on a daily chart using a 10-day moving average. It's not 8. It's not linked to a Fibonacci series number, which is why people use 8. It doesn't matter. 10 is a good round number. You can cheat and go 9. Doesn't really matter. You get the trend direction. If blue histograms are below the pink bar, it means that the volume is beneath the 10-day average of volume. Most time you can see that there's very few times that the bars get above that fuchsia line. And all the while, this thing has been accelerating to the upside with price. Nobody in their right mind is looking at going long this stock because the volume histogram did not reflect buying pressure. It's criminal. It's actually wonderful. Well, needless to say, this was the weekly little thing on SanDisk. And again, the histogram that I've created, and yesterday I want to quickly review this. The histogram is a reflection of this price and those moving averages. If the moving averages start to separate, yellow above gold, the histogram becomes more positive. If price departs from the moving average, the histogram becomes more positive. When does a trend cease to exist? When obviously the moving averages were wide and they start to narrow, and then price starts to get back closer to moving averages. That's where we get the divergence within that histogram, which is entirely a unique product to the TradeStation lifetime package, okay? It's vastly underused by most of you that have the TradeStation lifetime, and I want more of you to understand how to use it. It'll help you to define a stronger buy signal and a stronger sell signal, or when the trend is about ready to expire. It's a dynamic tool. Combined, the fact that this has got too many things, because the human eye can't look at where's price relative to old highs, where's the moving average relative to the blue moving average, where's the current bars close relative to both moving averages. I want to put a trade on. I don't know what I just asked, let alone what the hell I just saw. But I can see that this red line is higher than that red line, and that red line, and this red line, and that thing just popped green, and it went from low to high, and the direction of that momentum indicator is up. And if I can't see that, then at least I can see the yellow line is making a higher high and higher lows. Can you see that? And that tells me that there's strong positive price momentum. Is there volume behind it? Hell, I don't have a clue, but the world doesn't think so. But this does. Relative to that high closed doji on Microsoft, the volume made new higher lows and showed a basing of accumulation. Do you agree with that? If I lied to you and said this yellow line is price, does it look like more of an accumulation bottoming pattern here to you? And at this point in time, it's hard to tell, but you can see it on your own PowerPoints. The yellow line crossed above the blue line. You had an uptick in volume, a positive reading. So what filters out better buy signals? Obviously, this is SanDisk on the weekly chart using TradeStation, and this is the daily chart on Genesis, just to get a contrast of not just different time frames, but the two products that I have. Looking at SanDisk, this thing actually blew up in a daily high close doji, SanDisk. Increase in OBV was subtle, and actually the irony is, do you see the volume histogram pointing down, making newer lows? And what was the price doing? Smacking anyone who was short that in the face. It was like standing and being Mike Tyson's punching bag if you were short. It just beat the crap out of you financially. I have no other ways to describe that. But this is not 1936 charts. This is the environment you're trading in right now and the tools that the world uses. So I am tickled pink that you're down here, and we could take a look at what's really making the world move. This is Google. I did not go long Google. I was long Microsoft. But I did the analysis for the room, and I said, if you put a gun to my head, this stuff is off the charts bullish to me. Now, ironically, we had the volume prior to earnings was breaking out, making newer highs on a daily chart. The volume was making lows. I said this before, I think Saturday. I said it yesterday. I'm going to say it again to you today. When I see OBV pointing up and volume pointing down, I live for that. How many people remember me saying that? How many people took notes on that? How many people want to make that like a keen observation? Because that is critical. If we understand what goes wrong in the world, we could probably fix it. If we don't know what's going wrong in the world, how can you come up with a solution? Agreed? If we know that volume is a problem and that people still use it, and people are stubborn because they're human beings and they're going to continuously use it. And if they didn't, then there wouldn't be a phrase, what's the definition of insanity? Doing the same thing over and over again, expecting different results. So as human beings, traders are still utilizing this and they can't figure it out. From this year, let's review. Kansas City, Long Island, Atlanta, Sacramento, San Francisco. Tour of duty with TradeStation included San Diego, I think Orange County and the AAII. That was this year, wasn't it? Where the hell else was I? Seattle, I think. Oh, that was vacation. I didn't teach anybody. I didn't bring my backpack. I wasn't allowed to. Mary's back there. She saw that. So like, oh, you man, it must have been a bad cannoli. I go to the bathroom. Again, I don't know. That was on tape. So the long and short of it is that everywhere I've been this year, talking to individual investors, traders, conferences, everyone's got a problem with me. I told you on a serious yesterday. People across the way said, I don't have a problem with that volume anymore. I stopped using it. So some people are actually getting smarter and saying, hey, I'm getting tricked out of good trades. So use that information to your knowledge. For how long until it stops working? Yes. We don't really want to teach that much. This is a small company. They probably stopped gas Exxon. This was another one that we had on that weekend. High doji. The momentum indicator strong. The volume wouldn't tell you what the hell it's telling me except trending lower. The ODV was off chart already. who in their right mind was interested in buying Exxon. I guarantee you, no one in the media was saying get in energy, because at that point in time, they had a lot of people on the television, you know, and you sit there, oh, crude's going back to 30. Oh, crude's going back to 20. Oh, there's no problem. There's an oversupply. How many people know that? Raise your hand. Let everyone see. It's not from my information, but I mean, people are like, yep, that's about what the media's been telling us. So if the TV financial, which we're supposed to trust, says, and they've got so-called experts that say, don't buy this stuff, then what are these indicators showing you? The opposite. Somebody's buying. Because if no one was buying, this would not have an accumulative volume behind it. So if I got a buy signal, what makes it a stronger buy signal? A cumulative volume and positive momentum. Cumulative volume, positive momentum. Earlier this morning I said, why would I have chosen Exxon over Walmart? Get your head examined, John Person. It's Walmart. They're in China. The Chinese are lowering interest rates. They're in the United States. The holidays are coming up. People are shopping. We're going to get those emails with people in ugly costumes, and we're going to see those email jokes again. Right? How many people get those email jokes? Right? You see some really whacked out people at the Walmart customer jokes, right? We're going to get those again. Okay, we are going to get those jokes again. They're going to circulate every year. It's kind of like a seasonal analysis technique. It's just a matter of, is there a lot of momentum behind that, depending on how many friends you have, right? Lots of friends, lots of emails. That's how that works. No friends, poor momentum, okay? Strong spam guard, or momentum on those emails. They'll be blocked. It's a good thing. Walmart did not have strong volume accumulation. Walmart did not have any volume accumulation behind it, and I'll share that with you. But again, this is the weekly chart. Here's the daily chart just to share with you. What does the weekly volume look like? What does the daily volume look like when we walked in the door? Another example of a stock that had a daily high close doji with a weekly high close doji on an accumulation of volume. Which way is the blue line pointing? And if you can't see, then look at the red dashed line. What is the general trend of the red dashed line? It's moving up. At this point in time, what the hell is this telling people? At this point in time, most of the bars, except for one right in here, are actually below the MA. I mean, I really, relative to this is going down in volume and that's going up. So someone was buying there, probably Warren Buffett. And then Warren Buffett told everyone he's probably long right there. Oh, I've been buying it. He probably bought it there or here and told everyone he is in it there. Warren's he's very nice letting people know what he's into after the fact. I love this one. I looked at this and I went, and I'm not sure if it just had, I can't remember, I did not sell it short, but I wanted to sell the dickens out of it. I don't know if I just didn't have a good option trade to it, if there wasn't very strong, the bid and ask was too wide. It didn't make sense, but I wanted to sell I can't say how I wanted to sell this thing. I really wanted to sell this badly, okay? So I wanted to sell the dickens out of this thing. This had the makings of hitting monthly pivot resistance, right? This is the red line. It rallied with no volume behind it whatsoever, all right? And this is prior to earnings coming out. The volume on this, as you see the trend making a new low, but the price actually came back to the average area of highs. Do you see that? But the volume was significantly lower. This is a tell of a bad forecasting dream, nightmare coming true. It's Skechers. Now, I don't want to offend anyone if you own Skechers, but I'm going to tell you something. Ringo Starr looks stupider than the Dickens on stage wearing Skechers, okay? And I used to do a little drumming, and I don't know how he hits And I just don't know how he did it with the Skechers. Maybe they had a little filler backup drummer when he was on that award show. I don't know if you saw that, but that was the big thing about Skechers. I think it was some award show that he was on, and he played with Paul McCartney. Do you remember that? And then people saw Skechers, and gee, if Ringo's wearing them, they must be good. But boy, they do look. I don't see. It's like Crocs. They're plastic rubber shoes with holes in them. Not effective in Maine in January, by the way. Any event, the technicals of the volume hinted at a downside. Yes. I think that was a. This is earnings announcement, and that was, I think, this is supposedly a split or something alert, but it's on Genesis, so I don't think that was relevant. But I just kept that chart up there because of the E for earnings to let everyone know. Even before earnings, we look for trade opportunities because I believe, as a conspiracy theorist, somebody knows. Somebody who's about ready to put earnings out within the company is related to a secretary who put the memo out, who's about ready to report, whose boyfriend delivered something that knew somebody. Filter out better trades using A, breadth, and volume. Volume histogram is effective only for my work on individual days that show strong abnormal volume that may show a, what do we call, a hyperbolic or perhaps a exhaustion top or an exhaustion bottom. But looking at volume histogram as a defining trend tool is not effective and has not been for the last 8 years. And that is due to dark pools, as I talked about originally the other day, as well as increase in optionability of products. Now Jeff is back, so I filled in. I know he had things to do.
I thought you took me off of today.
No, well, you told me because you had a closing, and then you called back and said you were in, but the book's already got printed. You've been on the phone, so I told the audience that I was filling in for you until you got back. So, I was just little doing a dancy dove. Do you want me to carry on, and then you want to pick up after lunch, maybe?
Okay.
What's best for you? Did you want to be back in? You're in the loop, man. You're in the family circle.
You want to give him a break? Yeah.
Yeah, who needs a potty break? A bio break, I meant to say. Thank God I don't use floor terms anymore.
So stock splits was required.
What's that? Yeah, the stock split on that's what the S generally stands for.
Yeah.
On Genesis. But I don't think they split. Was it an announcement?
Split 3-1.
It's a split, a 3 for 1 win. That day or before?
10-15.
On 10-15. That was the split. That's generally what it is.
Yeah.
But then they had a really bad earnings as
That's
well.
all cost. Whether
Yeah.
it is or not.
Thank you, Becky. Let me see if I can answer that question.
Like the stuff? You have a lifetime supplement?
Okay, so you have this page set up, predisposed. Okay, typically we've got the 60-minute with daily. We've got the daily with weekly, weekly with monthly, monthly with quarterly. That's generally what I look at. Okay, if I want daily, and I want to get rid of these weekly pivots, right click, format analysis segment, just to make sure.
Go here, I look here, and I've got weekly pivots. Okay? And turn it off. Okay? Pivot just normally. Right click, insert analysis technique. Right. My computer has internet, ESAT, whatever. And then I want to insert my monthly pivots, okay? I can just go down and insert the monthly pivot. And bang, and look at that. That's the, whatever this is, XOP is projecting a significantly higher high and significantly higher low for this month. This is a monthly pivot. So I just took the weekly pivots off the daily chart, put the monthly pivots on the daily chart. You gotta insert it now. So I go back here, I want, and we also have a different feature, which is really confusing. It will have every pivot up here with the price is getting price. Your job to figure out what the time frame was. So we disabled it.
And it was.
Right. Thank you very much. Absolutely. That's like also. That's beyond it. That's why it's there. Yes, sir. Yes, sir. Or that's a question for a pub. Hey, John, I mean, don't be shocked. See, what's worse, not asking a question? How can I say something, John? I don't know anything about this pub. You know? I'll figure it out.
I'm not in it right now.
Hey, so it's not our, yeah. Yeah, I've been using. Yeah, okay. I said yesterday, and I'll say it again, I do not use charting analytics on costs. The only thing I really use cost for is option analytics, because that's what it was. It was not a charting package really per se, right? I mean, it's nice, the scanning thing, I cheat, because their scanning has something a little bit different than both Thinkorswim scanning feature. My indicator has something different that I can't do with TradeStation or Genesis. Genesis requires me to do more inserting of symbols. So for example, this is Trade Navigator. You guys have been seeing this box populated, okay? What that box is telling me all day long, LCD of the WOO, which is the euro currency. Long buy signal Gilead, 15-minute, generated at 11:02. I keep this up in my trading room, and this is where we get that list. I go up here to the quote board, okay? And I go up to my stocks, and now I have all of these names on a real-time alert basis that tells me on whatever time frame I insert, give me a high close doji of that time frame, a low close doji, a PPS buy, a PPS sell. This is an alert board that gives it to me on a stock that we are looking at, either 5 or 15 minutes, an intraday trade, or any one of these names. You see all of these, SLab, Baidu, Amazon, Priceline, eBay, I got eBay 5-minute, eBay 15. Celgene, Cirrus, Bottom, these are stocks that we are interest-based on. So when any of these alerts populate, it's going to be in this alert message. And so that's running, whether I'm in the room or not, all the time. No, in the trading room. Every day, it's right there, that location, every single day. Now, here's the problem. I don't know what Google is, or I don't understand that at 10:30, and it took time to, kick it out, but it was reported at 10:30 and 9 seconds, Google generated a high close doji on a 5-minute basis. So if you don't look at this. If you don't know what Google is, or you don't know what Green Mountain Coffee is, or if you don't know what Apple is, or Gilead, or Microsoft, or Baidu, and Baidu generated a PPS 5-minute signal, it generated a high closed doji on 5 minutes, and it generated a high closed doji on a 15-minute. So if you don't know what HCD stands for or Baidu, then this is just showing you a green thing if you don't know. Okay? So what I tell people is, by the way, on an intraday basis, obviously the more at every interval time period, 10:30, 10:45, the more stuff that fires off green ain't bearish. Right? We also included in that alert message besides stocks, the futures. So I have the ES, all those time periods, the Dow, the Russell, gold, crude, and bonds. So we will see, and you can see them right now. A buy, a sell, that's the PPS. A high close, a low close. I already have alerts that fire off for free of charge for those that are visiting in the trading room. There it is. So you don't want to hear me talk? Mute me. You think I babble? Mute my ass. You're busy? Tone it down. Mute it. But watch that when your time frames, and if you see all of a sudden everything turn green, you may want to look at, well, what stocks are, are these? And if you don't know, it says the time period. That's pretty powerful. So this is Genesis. TradeStation doesn't do that. TradeStation does, though, give me an intraday based on a 15-minute, and it's right here on the radar screen. It says equities daily. That's end of day. You'll have your pivot changes, your weekly and your monthly, and then right over here it says intraday. This is all based on a time frame, and the interval is 15 minutes. Okay, so I know that all of these products have been past tense in a 15-minute buy signal. If it's in trend status, it's been in a 15-minute buy signal. If it's in an uptrend, if it's green, been in a 15-minute. How long? I have to look at the chart. I don't know. If it was red, like Newmont Mining is red, and right now it's flashing green, it's telling you at the end of this 15-minute, 2 minutes, it's going to flash a buy signal on a 15-minute basis. I can look at the energy.
So does that interest you?
All the time. All the time. If I'm looking for a pullback on an entry, I got a daily buy signal, market opens lower. I got a daily buy signal, but the market opens lower, trades lower for the first half hour. Okay? All of a sudden, I got a 15-minute buy signal. Bing. All I have to do is look. I mean, this is just. I can't believe we created this. It's genius. All I have to do is click on that single link and say, okay, there's your 15-minute buy signal. It generated a 15-minute buy signal. Do I want to buy this stock at 35.11? If I'm day trading stock or I'm looking for an entry and it pulled back to pivot support, I could look to be a buyer. This is at daily resistance. It's not a big deal. But in the meantime, I can certainly take a look at how many stocks are populating intraday buy signals, right? And how strong are those buy signals? Let me go down to the different sectors, and I can find out what's having an intraday weakness right now. Amazon's pulling back a little bit. Amazon may form a daily low close doji.